Hey guys, how's it going? I wanted to do this video real quick to show a scalp trade that was made off the 5-minute charts where I actually bid a level blind. Same way that I do on my swing trades, but I wouldn't call this a swing trade. I was just looking for a quick scalp, 5-minute chart. But the setup. It's pretty much the same thing that I look for on the hourly, which is that we have a really, really, really great level. Um, you can see here. And the things I'm looking at is just how well defined it is. It's just very clean, very clear, well defined. You can see that it also had sort of a price flip area here. You can see just a little bit of bounce there, a little bit of that little green candle there before price plummeted through it. And got that bounce there. Uh, and it's the kind of bounce that actually provided a good market move away from it. So it shows that, the sellers that sold this market are pretty serious. Um, could kind of call this one another touch, although it didn't even really get close to that area. But still, there was a sizable drop away from there. And then you can see here when it started getting to this area, it's just started hit up against this what's now resistance, and then price just bust through that with some strength. And the other thing that's keenly in my mind is just the way that price traded out of this. It's the kind of breakout that everyone wants to be on board from the beginning. I don't trade that way. I wait for the breakout to occur. I wait for a clean breakout, and then what I'll do is I'll rebid the level after the market has put in some space in this area here. I don't like to rebid the levels if it breaks out and then just breaks right back down to the level in, say, I don't know, the next candle or so. Because if it does that, then it's possible that it's actually uh, just a false breakout, um, or a failed breakout to be more accurate. If this were to trade right back down to that area, I'd be a little concerned immediately, if it were to trade back immediately afterward. The other thing that I'm looking at here is, well, there's two things. This was right on the 10200 level, and we had a gap that hadn't been filled. So when this happened, and this was on the 5-minute chart. On the hourly chart, you couldn't even really see this level. It was just, there was like nothing there. Uh, I noticed it on the hourly just because I just happened to see an area where there was just a clearly defined area of structure. So I didn't have anything to trade off the hourly, but when I just decided to just take a peek at the 5-minute to see what it looked like there, and I saw this. And when I saw that, it's just, I have to go bid this kind of a setup because it's just, everything lined up. Like I said, you have the round number, you have this really perfect area, and you have a gap fill. So um, pretty straightforward and simple. And so I immediately bid the level 101.98, which just I think was the high of this candle here. Was also looking at this area here as a potential area to bid, but just looking at the level, I wanted to be in this market, and it seemed likely that it would at least get to this area. So let me pull up the next chart. This was September 30th at 1:47 p.m. And then at right after 2 o'clock, I got filled. All right, and that's what the market looked like when I got my order filled. All right, it looks pretty scary, doesn't it? It takes some getting used to, because It's just something that bidding a level blind, it definitely it just takes some confidence, which you just sort of build after seeing it happen over and over and over again. You start to get comfortable with it. Of course, there are times when it could just plummet right to the level, but uh, you know this is a great setup for me. This is a kind of setup that every time I see it, I'm going to take it. Um, now, let me take a look at this is how the trade played out. Um, it went right to the gap fill, and I actually just hung on to it because I was curious to see if it could get past the gap. But you can see, oops, I don't want an arrow. I want a line. Perfect touch, right on the low before the gap, and found some bounce. And once I saw the bounce off that area, I got at. And I had my trading journal. I just wrote down. I got out of 102.68. So that was 5 ticks where this price is now. So it's somewhere around there. So now in looking at this trade, it is clear that I did get some rejection at that area. So I could have entered based on price action. All right, and that's always a possibility. But the thing about that is, there's a lot of reasons why I will bid a level blind, and one of them is because I get a greater risk reward. Um, the other reason is it's also closer to where I'm wrong on the trade, uh, because and to illustrate that, let me just I'm going to pull up another trade. And this is not a scalp trade. This is one of my swing trades. This is silver, December 30th. I think it was my last swing trade I'm sure it was my last swing trade of the year, of last year. And this is silver on the 1 hour chart. And you can see my setup here where we have this clearly defined area of structure. Um, and price rockets out of that area. Gives no chance to those people that want to get on board this market. They either have to just pay up, um, or have foreknowledge of the fact that this market's going to break out, which is sort of like a gamble for me. So that's again, I don't do that. I wait for the market to break out of the area, and the moment it breaks out, and the moment it looks like I've just missed a breakout trade, and this market is just going to take off without me. That's when I put my order in. I'm already sitting on the bid. Uh, and so I go bid this market at 19545. The low of this candle was 19540. Silver trades in 0.005 tick increments. So that's 1 tick. That's a 1 tick drawdown on this trade. And that's really why I do it. Because, I mean, well, let me illustrate by showing what happened afterward. All right, and you see my target is up here, my stop's down there, out of the way of the market. I was looking at those two little lows there and figuring, okay, I'm just gonna get my stop out of the way of those lows, and this is how the trade worked out afterward. Looking at this trade, if I were to take this from the perspective of getting in based on price action, first of all, there really isn't any price action I could use here. If there's not really, there's no pin bar here. There's no sort of candle formation. I could maybe take a look at these two candles, and if anything, we do have an inside bar here, which breaks here. All right. So let's say I was actually playing a particular price action setup. That means that my target's here, I was looking at this area. I was actually looking at these lows, but just looking at the context of it, I had a feeling that the market would try to gravitate towards this area here. So I had my target here. Uh, you know how I trade. I cut the trade after in these big thrusting candles that come like within 2% of my target. I'm going to take profit. I'm not going to sit there and fiddle around with it. If I had gotten in here, yes, it's questionable as to whether my stop would be here underneath this candle. Either way, this would probably be a 0.5 R I'd be looking at. Whereas if I get in at the source, I'm looking at just under a 2R. So I'm risking this much to make, to make that much. All right. That's where I want to be. That's how I trade. And you know, it's yes, my strike rate does dip by not waiting for price action confirmation, but you know, it just everything. I just can't do it. If I get in here, where am I wrong on this trade? Well, it's going to be down here and that's even sort of iffy because on the hourly chart, it when I'm trading level to level. I mean, oftentimes the market does oscillate, and it can put in a candle, it could break that low and then take off, and yeah, that happens quite often actually. Um, Either way, if I get in at the source, I have a lot more options for managing the trade. And you know, if I'd gotten in up here, I just wouldn't know if I'd be in drawdown. Well, I'd be well in drawdown before I had a feeling that this trade might not be working out in my favor. And you know, I'm gonna have to pay all of this to find that out, basically. So, you know, I really want the best price possible, and that is down here, and that's why I do it. So, just one more example here. Just want to bring this one up. This is the Euro Bund, one of my favorite markets. This was December 23rd. This was just 7 days before that one. And this one, let's see what we got here. Let me just find the right chart. Oops. Okay. The context with this is looking at the daily chart, and this is after the fact. You can see here. The candle at the time, December 23rd, which is here. Oops, can't see that, can you? There you go. December 23rd. And this is the candle I was looking at. And this is a great pin bar. It's also a great pin bar in a great area because just looking at this level, this swing low here, price had broken just below it and then rejected sharply and trade back up into this area here. All right, so it's trading well in that range, closed well in that range, in that area. So when I saw that, I was going bid at the left eye, which is that level right there. And I took my entry based on the hourly chart, which you can see here. All right. My stop's out of the way. I'm figuring if it does bust below that left eye and it gets below this area here, then I'm not right on the setup. All right, because my premise is that it's going to bounce at that left eye there, and that's going to be the turning point. So I have some leeway, some room, and I was actually this being taken, it was based off a daily chart, but my entry is based on the hourly. Um, my target was up here, and then it never even came close to that target, and I'll explain that in a moment. But again, that's one of those things where I wouldn't have any leeway to manage this trade if if I had gotten in, say, I don't know, I can't even, there's no price action here other than the pin bar. I mean, I could just, oops, that's not the chart I want. I mean, I could just mark it in at the close of the day or the next morning open, and then where would I be? I'd be in drawdown for the rest of the day, and then look what happened afterward. All right, but I actually made a profit. I made a really good profit on this one. It was I love this trade, and here's why. This is looking at the 5-minute chart. This is where I had my limit order, and that's where I got filled. And this happened. Uh, this happened while I was sleeping. It was just before 5 in the morning, and I woke up and I got my alert and said I was in the trade. That's a 1-tick drawdown on this trade. Now, it put in a high here and then started going sideways. And this also was right before Christmas. This was the 24th. And given that we were going into a holiday and we were nearing the close, I was not going to hold this over the holidays. Not a chance. All right, and especially just the fact that we're just not getting any push to the upside on the next day, which if this market's going to go, I just expect that we had this candle, it should just go, and it's not going. It's just going sideways, and it puts in that inside, basically ends up with an inside day there. So I cut the trade, and the thing about my entry is because I got that entry, I actually managed to book a pretty decent profit on that one. And it's just something I could not do. There's no way I could do that any other way unless I had gotten in at the source of the move. And that's what I'm looking for, and that's why I trade that way. And so anyways, it's just a little, just something I thought I'd throw out there. And yeah, anyways, that's that. Nothing more to say. Take care, guys, and talk to you soon.